What are the ethics of istisna in Islamic banking? Have you ever wondered how Islamic finance ensures fairness and transparency in its contracts? One key contract type is istisna, which plays a vital role in manufacturing and construction projects. Let's break down the ethics of istisna in Islamic banking and see how it aligns with Sharia principles. Istisna is a contract where the asset does not exist at the time the agreement is made. This is particularly useful for projects like building factories or creating custom machinery. The ethical foundation of istisna is built on principles that promote fairness and mutual consent. First, both the buyer and the manufacturer must agree on the specifications, price, and delivery date. This clarity helps avoid misunderstandings and disputes, ensuring that both parties know exactly what to expect. Next, istisna contracts are designed to avoid interest, which is prohibited in Islam. Instead of charging interest, the price is agreed upon upfront or through a deferred payment plan. This structure emphasizes a sale rather than a loan, aligning with Islamic values. Another important ethical aspect is that the asset being manufactured must be halal, meaning it is permissible under Islamic law. Projects involving prohibited items would not be acceptable and would violate ethical standards. Risk sharing is also a key principle in istisna. The manufacturer is responsible for producing the asset according to the agreed specifications, while the buyer assumes the risk of receiving the asset as promised. This balance helps prevent exploitation and ensures that both parties are treated fairly. Additionally, while istisna involves future delivery, it is essential to minimize uncertainty. The contract should specify detailed terms to reduce speculative risks. This aligns with Islamic ethics, which discourage excessive uncertainty in transactions. Lastly, istisna financing often supports productive activities like infrastructure and agriculture. This focus on real economic activity promotes community welfare rather than just financial gain, which is a core objective of Islamic finance. In practice, banks use istisna contracts to finance various projects. They may enter into agreements with customers who need custom-built assets, paying the manufacturer in stages or upon completion. The bank then sells the finished asset to the customer under agreed terms, ensuring compliance with Sharia ethics throughout the process. The ethics of istisna in Islamic banking revolve around fairness, transparency, risk sharing, and the prohibition of interest and speculation. These principles ensure that istisna contracts serve as a Sharia-compliant tool for financing manufacturing and construction projects.